So we got Billy here. He's he's saying hello to everyone. Good Sunday, everyone. The live stream is going to be earlier today, as you know. There is a big football match here in the UK, England versus Italy, and most of the viewers are going to be, of course, watching that. So I decided to do it a little earlier. So hopefully you guys can see me here and hear me. Billy's going to go back on the sofa now. Come on, boy. There you go. All right. Billy is awake. Yeah. Billy is awake. I had a few. Let me bring this up now. Okay. All right. Just wait until everyone gets here. I timed the live streams for 6:50 p.m. London. Usually we start at 9. Maybe you guys can tell me if you prefer this time, around 7 o'clock. I don't mind doing it at 7, which would be 2 p.m. London. We've got the usual suspects. SW, hi SW. Crypto Bird Dog is here. Damien is here. I think I've seen Lord Humongous is here as well. Randy Osborne says, Caitlin Long explains that 10-year treasury is rehypothecated, which means there isn't any pristine collateral left besides gold. Well, the whole fiat currency system is hypothecated with derivatives. Not only over-the-counter derivatives, not only exchange-traded derivatives, but the swaps that the banks trade, over the counter. That was the big question about Basel III. So the topic of the headline, the title for the live stream is the Fed's 2% inflation policy extracts wealth from the public. I know that is obvious, but for a lot of people, it isn't, because when you think of 2% or even 3%, you don't think of it as a big thing. But the problem with that is that compounding the inflation, it's just the flip side of compounding interest. It's a negative compounding. So it might not sound a lot. And I think that's what the politicians and the central bankers, that's how they get away with it, because most people unfortunately get compound interest. So we're going to go through that today. It's very simple. I've got a good website here for people to look at just to see how much the general public is getting off. I've also got some good data from the Fed, the Federal Reserve, in terms of how inequality has grown for the last 30 years or so. And let's see, I've got it up here. Wealth, assets. And you'll see, how the bottom, really 90% has been really hit hard by this policy of inflation. That is the Keynesian thing, that we need inflation, which is basically debasing the currency. Like that's going to be good for people who hold that currency, right? Audio distorted. Sound problem, breaking up. Okay. Let's see what's going on here. Is that better now? Sound is a mess. Okay, that's not good. Yeah, I think there's something going on here. Just want to see if it improves. Is that better now? Okay, that's better. I'll use my, I think this was getting connected with it, and I hope that's better now. Is that, yeah. Yeah, that's better. Okay. Sorry about that. Overmodulation. Sound, let's go on the preferences. 1, 2, 3. 1, 2, 3 testing. Okay, I think that's going to be better now. Is that better now? I think that should be better now. Yeah. More volume? Okay, great. Anyway, we still got a minute to go. More volume, better? More now? One, two, three, testing, 1, 2, 3. Okay, that's good. All right, that's perfect now. Sorry about that. So yeah, it's 10 to 7. That's when I said I was going to start. Great to see everyone here. I'm sorry for the change in time. Maybe it's for the better. Maybe people will prefer this time. You'll have to let me know. 9 o'clock here, that's usually when I do. 9 p.m. is a bit late on a Sunday, but I have to think of everyone around the world. But this could be a good time as well. So let's get straight to this 2%, because we hear from economists, from central bankers, that we can't have 0% inflation, that we can't have even negative CPI because it's bad for the economy. But I would argue that it's all rubbish, really, because I'm going to bring up here we go. I got this website. I'm going to put a link to it in the description. So it's very simple. We've got it in euros. Now let's put it in dollars. We can change it. It doesn't really matter, the currency, the numbers matter. So let's say we have 2% CPI, what they call inflation, for 5 years. So your $100 in 5 years will be worth just over $90. And unless your wages go up by that amount, you're going to lose out. And I would argue that that's why the bottom 90%, especially the bottom 50%, have been hit so hard over the last 32 years or so. And I'm going to come to that in a minute. We've got data from the Fed, right, that actually tells us how the inequality has grown. So let's change this to where the CPI is right now. And I would argue, of course, that the CPI, if calculated how John Williams does, how the government used to calculate it in 1980, is probably a lot higher. But let's say right now it's running at around 4.5%. So in 5 years' time, you're going to have lost $20 dollars of purchasing power. And that's why I don't think we're going to have bail-ins. We could have bail-ins of people's money in the banks, but the way they're going to do it now is through inflation. You might leave $100 in the bank and it might still be there in 5 years' time, but it's only going to buy 80 pounds worth of goods from 2021. And that's the big inflation scam. How can central bankers, come out and say that we need 2% inflation? Why not have zero, right? I mean, it's silly. Let's calculate zero. So in 5 years, your money will still be buying the same. Yes, of course, there are things that go up and others that go down. But on balance, I think this would be better for people in general. And I'm not going to show you the Bank of England calculator. I've done this before. You're going to have to take my word for it. But the inflation from 1821 to 1914 in the UK was slightly negative per annum. So we actually had deflation and the economy ran pretty well. So let's have a look at some of the questions here. Dave L says, next to no inflation when on a gold standard. Yeah, and I think also bimetallic standard is a good thing. You have both gold and silver in the system. You set a gold silver ratio of around 15.5 or 16. Yeah, and we have to measure money through a weight of gold or weight of silver. I guess we get the problem when governments start printing currency out of thin air. That's the whole problem, right? And the best thing I would say as well is to abolish the central bank, because the central bank is a monopoly given by the government. And when you get big crises, that central bank will issue loads of currency out of thin air, backed by government debt that the government issues on our backs. So yeah, I mean, there's a rule as well about inflation. I think it's if you get 5% inflation over 7 years, the value of your money halves. So let's see if that works. No. I think it's 7% over 5 years. Let's have a look. 7%. 7% over 7 years. Is that the one? No. Yeah, that's the one. If you get 7% inflation over 10 years, the money, halves in value. So, and I think the reason people, sorry, let me share that with you. 7% inflation over 10 years and your money halves. There you go. And I think they get away with it because most people are not mathematically literate. Well, they do maths in school, but and I remember that even when I was young, I always used to ask the question, why am I going to need maths when I grow up? I used to like more history and geography and those subjects, but I would say it's a very important thing to know, mathematics, arithmetic. Chris Conman, thank you for your super chat. How do you think the markets, gold and silver, would react if CPI came out on Tuesday with a double-digit increase? Well, I saw the tweet by, I'm just looking at Billy here, who's making some noise. I saw the tweet by, what's his name, Cliff High, that someone supposedly from the BLS a whistleblower came out and said that they're expecting a high double digits. I mean, high double digits. Do they mean in the teens, like 15, 18% on the year? Or is it 50, 99%, which is just before triple digits? No, if the number came out a lot higher or above 10%, it would create mayhem in every asset class, bonds, stocks. I had a look on investing.com. The expectation is for a number around 4.5%, I think, or maybe a little less. We'll have to see. Mining ratio should be the ratio. Yeah, I mean, historically, the gold-silver ratio over the last 300 years, I think Isaac Newton set it at 15.5. I think Hamilton set it at 15.5. It was adjusted 16 in 1837, if I'm not mistaken. So, yeah, or maybe just let the market decide what they want to use for money, really. But money is not simple. Money is complicated. But I think it should be left to the market, to the free market. There's only one way. Thank you. Kickoff at Wembley just overthrown security. What do you mean by overthrown? There's only one way. Do you mean it was delayed, the kickoff, because of security? I don't understand your the way you've written that, but that's what it looks like. So some people would argue with this that wages, go up and that inflation is not a problem. I think we had a CNBC article last week saying that there's a silver lining to higher inflation because wages go up. But I would argue that wages don't keep up with the real cost of living. And so I've got the board. This is from the Board of Governors. This is the distribution of household wealth since 1989 by assets. And if we look at it, you see this brown line here. This is not the top, the bottom 10%. This is the bottom 50%. So we see here that in 1989, they own 7.2% of the wealth, the bottom 50. And now, if we go to the latest number, it's 5.4. So wealthy people, they can afford to invest in hard assets. They can afford to invest in the stock market. They can afford to withstand stock market crashes and hold on, hodl, if you want to call it, through bad times. But usually people in the 50%, they might start investing, but then you have a crash like the dot-com bubble crash. You have a crash like 2008, and they lose a lot of their assets because they can't afford. They lose their jobs. They're highly indebted, and they have to liquidate. While the very wealthy, not only can they stay in the market, a lot of times they get bailed out like they did back in 2008 and 9, like they did last year. So if you look at the top green here, that's the top 1%. Look, back in 1989, they owned 20.8% of all the assets in the United States. Let's have a look now. Now they own almost 30%. That's the top 1%. And if you add the 90 to 99 percentile, which is the top 10%, then we get like almost 2/3 of the wealth. So the top 10% are owning 2/3 of the wealth. Back in 1989, it was like 56%. So you can see how inflation really hurts the middle class and the bottom 50%. Yeah, I mean, if you look at the top 90%, the bottom 90%, they now own 36.2, and they used to own the bottom 90%. Let's have a look here. 40, almost 45% back in 1989. I would argue that it's been because of the inflation, and the general public, it's much harder for the general public to fight inflation because their disposable income is a lot smaller. They have to, they have to pay their rent, pay their mortgage, pay for food, pay for shelter, pay for utilities, and they almost have nothing left. So if the Fed keeps inflating by 2-3% and they can't invest, they're going to fall behind. And I think, when the Fed comes out now and says, oh, we want to be help minorities, we want a more equal society. I think that's just propaganda, because if they really wanted that, they would go back on the sound money system. They would close shop and let the market decide what money is, and would not have a monopoly-based central bank. Gary Nigel Draper, historically, gold has been wealth preservation and silver currency. That's right, they have been. Back in the prior to World War I, especially here in the UK, if you worked all your life and you saved money in gold or silver, the money was backed by gold and silver then. Let's say you started working in 1850 and you retired, let's say in 1890 or something like that. The money that you saved throughout your life would still be buying the same, basically the same goods that you were buying in 1850. And apart from that, you would get a reasonable rate of return, reasonable interest rates. So you could save, let's say, 25% of what you earn through your working life. And once you retire, you don't have that as many costs as when you're young. So you would be okay. But nowadays, people have to speculate. They have to leverage. They have to borrow. And it's all because of the inflation. Nicholas Martin thinks the reverse repo is going to show who is swimming naked. Yeah, there's definitely a problem there. It's to do with the bank statutory leverage ratio. The whole system is all screwed up, I would say. SI player guitar. Yeah, I did the video live stream earlier because a lot of my viewers in the UK and also in Europe will be watching the football. It's a big game. It's the equivalent to the Super Bowl almost, the European Championship final, the football final. Yeah, we don't call it soccer in the UK, it's football. Yeah, let me know if you guys prefer this time. Me doing it earlier, maybe at 7 o'clock London instead of 9. Nicholas Martin, why they're parking at the Fed? Well, because the Fed, there's a few reasons why. I think one is that maybe they're not comfortable with lending to the public, even at 6-7%. We saw that Wells Fargo is ending all the line of credit, so they may be concerned about the economy. The other thing is to do with regulatory reasons, because the Federal Reserve has been doing so much QE. They've more than doubled the balance sheet since last year. And when they do that, they buy assets from the banks, and the banks get loads of cash. and they're going overboard in terms of how much assets they can hold on their balance sheet, cash they can hold, and if they lend out to consumers, to the economy, their balance sheet increases even more, and there's restrictions to that. At the end of March this year, the Fed had an exemption for these regulations, and they didn't extend it. So one way to get their balance sheet under control is to lend all the cash to the Fed and keep, the repo happens. They lend it one day and they take it back. They keep doing it every day. It's a really crazy thing. And the reason why it's gone up so much is that since the last meeting, the Fed raised the reverse repo rate from 0 to 0.05%, which doesn't seem much, but when you're lending $1 trillion or hundreds of billions, 0.05% makes a big difference. And there's no risk leaving the money at the Fed. I think it's really hard to know what it all means. I don't even think Zoltan, who's the guy from Credit Suisse, who knows a lot about repo, who worked for the Fed, even he doesn't know necessarily what's going to happen. Not last year, but 2019, the problem was that the repo rate went up to like almost 10%. It was 7% more than the Fed funds rate. That's because the banks and financial institutions didn't trust each other. They didn't want to lend to each other. So, and there could be some of that now as well. Mike G, very good time. Thank you. Now I've been to your questions. Please answer mine. What's your question, Mike? Sometimes it's difficult to me. There's a lot of you on the chat. If you ask me the question, I'll try to answer it. Larry Ferris, was the Basel III advantage given to LBMA a permanent thing or only temporary? I don't know. I've covered Basel III because a lot of people have been asking me about Basel III because there's a few guys out there who said it was going to be a huge thing, and it might still be. But I've always said that we need to think about gold and silver as money and as a way to safeguard our wealth from inflation, and that the fundamentals are, haven't been better, never been better, and they're going to stay the same for many years because the central bankers need to inflate. So, yeah, I think we should forget about Basel III really and just focus on stacking, because the central bankers don't like when people buy physical gold and silver. The bankers, they try to push all these ETFs on people because they don't want you buying the real thing. And I've been saying this for years, to keep stacking physical is the only way. It's the Achilles heel of the bankers. Danny Dan, what is the cheapest asset to buy if you had one choice? Well, crypto, I mean, there's thousands of different cryptos you could buy. I would say Bitcoin right now compared to silver is very overvalued. So I'd rather buy silver than crypto. Metals and commodities are still really undervalued versus, I guess, RE is resources. You mean commodities? Yeah, I prefer commodities rather than cryptos and stocks. Not saying, there's a lot of altcoins out there that, they can move 500% over a few months, and some of them did recently, but they also came down like 80%. So yeah, I think commodities, precious metals are just starting a huge bull market, and I've been saying that actually since almost a year now. So there you go. Hopefully that helps. Bass Vandenberg, are you aware of ISO 2022? It's about digital currencies they want to use in their system. Not really. I've heard of CBDC, central bank digital currencies. Yeah, I think they're going to try that. We saw the video from the managing director of the BIS that the central bankers want to have control over our lives. But one way to stay out of that system is not to put all your savings in a CBDC, is to keep it in physical gold and silver outside the system, or, other things. Gold and silver are not the only things. They are, of course, have a great track record of maintaining purchasing power over thousands of years, but you have other hard assets like farmland, anything you can think of. Nicholas Martin says, Rick Rule said without uranium, the lights will go out in the next 10 years. Yeah, I haven't really looked too much into uranium recently. Nuclear power. Let's see if I can find Mike G's. He didn't ask me the question, Mike G. Let's see if I find his question, because he didn't come back. Well, anyway, question from Kisira. Won't they charge us an outrageous tax to convert our gold and silver to CBDC? Well, it depends on your jurisdiction. In the UK, for example, certain coins are legal tenders, so they're like money, so there's no tax, but they could change things. Yeah, they could change things. The way to, avoid that, there will be a black market where people actually buy things with gold and silver. They exchange, kind of barter, use it instead of the CBDC, I would say. What's the difference between the federal government and the central government? Please answer the question, or are they the same? Thank you. Federal government, well, in the United States, you have 50 states. So those, and every state has a governor. So that's the state government. And then the federal government in the states is based in Washington, D.C. And they run, I guess, federal institutions like the Army, the Navy, and things like that, and other parts of the federal government. So yeah, federal government in the US is the central government. So it's one and the same, I would say. In the UK, we don't call it federal government. It's just a government. It's based in London. That's the central government. But we also have regional governments, county governments, and things like that. Hopefully that answers your question. I had a few other things here. Let's see. Oh, yeah. So we've looked at inflation. Just wanted to show you guys a document from the World Bank, and I'm going to share it with you. I'm not trying to depress anyone. I'm just showing you that what's going on. So as you can see, it's from the World Bank. It's not from a conspiracy website. And International Bank for Reconstruction Development, International Development Project for Appraisal. So COVID-19 Strategic Preparedness and Response Program. and proposed 25 projects under phase 1. So I'm going to scroll. This was published last year in April. So I'm going to scroll down here to page 6. And I've covered this before. Some of you might know this. So this is when this COVID preparedness program started here. You see, 2nd of April, 2020. And it's expected the project is expected to end 31st of March, 2025. So, you know, unfortunately, I think we're still in for a lot more problems and crises ahead. And I think that's why we need to keep a hold, you know, try to stay outside the system. They're going to keep inflating a lot, everything. So Lily Robin says, I love silver. I've been buying silver medallions made by Medallic Art Company. I love them so much. People, the CX ones. Okay. Just Pars says he has a classic car guy. I mean, whatever you think is valuable, I think there's a big chance that we could have a currency collapse, which is a hyperinflation. And when that happens, and I'm going to be interviewing next Saturday, I'm going to interviewing Star Path Academy. I'm looking forward to interviewing him. He's got a very good YouTube channel. He went through the hyperinflation in Romania in the 90s. And he's got a lot of good advice, Star Path Academy. And I think you will enjoy, hopefully, our chat about hyperinflation. I'll show you here. Some of you might know Star Path Academy. And one of the things he said that was really interesting is that in a hyperinflation or even in a high inflation, how can I say, scenario, you don't measure items or goods and services against the national currency. You have to measure goods and services against each other, because the currency loses all kind of real value. It gets really messy. Are we there yet? No, but I think we could get there. I think this talk of transitory inflation is, how can I say, they're losing that. They're trying to pretend that things are transitory, and they're not. So yeah, on Tuesday, we got the CPI. I know that's a manipulated number, but most of the central bankers, politicians, economists, Wall Street, City of London, they've been taught Keynesian economics. They've been taught that, and it's funny because they made the same mistake in the 70s. People didn't believe in the 70s that you could have inflation and the stagnant economy, which became, of course, stagflation. It was the same. They thought the same thing back then, and they think the same thing now, that you can't have inflation with an economy slowing down, and they're going to be wrong again. And unless the central bankers tighten policy, which they might try to do, but if they tighten policy, everything is going to collapse. So they'll have to inflate again, and then we're going to have a hyperinflation. I think we're going to end up with hyperinflation. So there you go. See some of your questions here. Robert 292. They are reporting M1 and M2, but only monthly, and they've smoothed it out, but it's still growing quite significantly, M1 and M2. So yeah, but they're trying to instead of publishing every week and people looking at it every week, they kind of resorted to publishing it only 1 month, every month. But we can still keep a track of it, and it's still going up massively. Alan Zibelman, yeah, I today I'm doing it earlier because there's a big football final in the UK and Europe, and a lot of my viewers on this side of the pond are not going to be, they're going to be watching football at 9 o'clock or 4 o'clock your time. I think the second half starts at 4 p.m. New York. So yeah, people wouldn't been able to be on the live stream. I did warn on YouTube today. I put a post on YouTube. Yeah, hopefully most of you did see it. Nicholas Martin, we've had inflation for years just because it went into assets. Yeah, it not only went into assets, it's gone into everything. It's just that they've manipulated the calculation of consumer prices. They've been able to keep commodities prices low, but I think commodities are just starting a bull market. I'm going to show you this chart, which I've shown you many times. I think it's the CRB. Let's bring it up. Yeah, it's not going to go up in a straight line, the CRB. It's going to be bumpy, but I think it's just beginning, and we got to hold on, to our hard assets, precious metals, commodities. And commodities, I guess, the best way to hold it is through companies that are involved in the business. I'm not here to advise people about that. You need to do your homework. I'm just giving you my opinion, what I think. But look at this chart here, commodities. This is the CRB index, a monthly chart. Look how it topped in 2008. It went back up in 2011, but it didn't really make a new high. And last year, this was like a false breakout or breakdown. It was like a bear trap, and now it's picking up again. So I think we're still in the beginning innings of the bull market in commodities. And yeah, inflation, even during Weimar, the Weimar Republic, which was, of course, came about at the end of World War I when the Kaiser abdicated. But in Germany, they started inflating right after World War I started. But the inflation didn't show up in prices really, not until after 1920, around 1921, 22. And Paul Volcker, for example, in 1980, he let rates go to 20%, and that killed the inflation. But the Germans didn't do that. They kept inflating, and it led to hyperinflation because people realized, oh, they're never going to stop doing this. And I think right now, investors and the general public, people who are not awake like we are to the inflation, they still believe that they can stop it. And I think when they realize, and I think that time is very near, when they realize the inflation will never be able to be reined in, then you're going to see the road to hyperinflation. And once that starts, it's sayonara, as they say. Let's fix it. Why couldn't they just manipulate the CPI number on Tuesday? Well, they can, and they probably did the last CPI number, but there's a point where, you manipulate it a lot. You make yourself look ridiculous because there's a lot of private researchers that keep track of the things that the BLS is supposed to keep track, and it's public, it's fairly public information. So if they come out and say that the CPI is 1% year on year next Tuesday, people are not going to believe them. So there you go. Blast from the past. I'm sure Paul Volcker is turning in his grave. Yeah, I think Paul Volcker was a banker. I mean, he worked for Chase, I think, but I think he had a problem with the modern banking, all the derivatives, all the leverage. I'm not saying he was a saint, but yeah, the world changed since he was a central banker, or central banking has. Belly dance, Rob, yeah, I think that's what they're looking at. After the hyperinflation, they're going to try to sell the CBDC. I think it will fail. And then eventually they'll have to go back to gold and silver, because unless the CBDC is redeemable, if you can redeem CBDC into physical gold and silver, it's not going to work, because hyperinflation is a traumatic event. It's a complete loss of confidence, not only in the central bank, but in the state. So, and I think we're getting the loss of confidence in the state and government right now, especially with what's going on, has been going on since February, March last year. Tricky T 1957, thank you for your Swiss francs. Do you think the issue of a CBDC will effectively split currency into two kinds of money, old dollars, new CBDCs, basically pegged? Yeah, I mean, when you get like a new currency, like I think in the UK in 1971, they had a decimalization. In 1998, you had the euro, all the old European legacy currencies went out of the way. The public always loses out. So definitely, especially if it's after hyperinflation. But I still think physical currency will circulate, especially where you are in Switzerland. I don't think the Swiss will give up their banknotes anytime soon. From what I know, people like using cash in Switzerland. So yeah, it could be a hybrid. You could have right now we have a digital. A lot of people use cards, all digital payments, but still a lot of people use cash. Russia announced they'll be buying more gold than they produce, so they will be buying from outside their kingdom or federation. It's not a kingdom, Russia, but I know what you mean. Yeah, Robert 292 mentions money velocity. I mean, that's something that the deflationists always bring up. But I say that money velocity, won't matter once faith and confidence in the currency, evaporates. People won't want the demand for currency, and money will collapse. And when the demand for money or currency collapses, the velocity will go through the roof. Right now, the velocity has gone down because the economies haven't been doing well and the money supply has gone up a lot. So that's why velocity has gone down. But as I've said, inflation is the excess creation of money and credit resulting in higher prices. And it's been going everywhere, especially financial assets. But it's starting to move all over the place. And I think commodities are going to be the barometer saying, we have real inflation. And we've had it, of course, since Nixon closed the gold window. Someone put this, I'm going to share something else with you guys. Someone put this little chart here, as you can see, of inflation. I'm going to enlarge it so you can see it. It's a screenshot that I did. So the crime of 1971. So it says ending the convertibility of the US dollar into gold. But it's not just a convertibility, but it says at a fixed rate, because you could argue that right now you can convert dollars into gold, but it's floating. The key thing here is fixed, and the fixed rate makes it really hard for the government to inflate. But since 1971, as you can see here, when Tricky Dicky closed the gold window, look at the US consumer goods prices. So it's just gone through the roof, and it's not going to get better. So for all those people out there who say there is deflation, just look at this chart. Okay, we've got a super chat here. Danny Dan. Thank you, Danny Dan. I'm going to invest in wheelbarrow companies. I'll be a billionaire quick like. Yeah, we'll be talking about hyperinflation and what happened in Romania and Eastern Europe next Saturday. Yeah, it's gold and silver on their own won't save you in a hyperinflation. They'll facilitate things. But I think from listening to a lot of Start Path Academy's videos, the most important thing is community and having friends and family and helping each other in the hyperinflation. But that's for Saturday's interview with Start Path. Lily Robin, yeah, he's going to fight the speculators. I have to defend the American dollar. So whatever politicians say, it's always the opposite, right? Amir Mohammed, can gold prices collapse if Fed hike interest rates as it did in 2013? I don't think the Fed hiked interest rates in 2013, but they might, raise interest rates if the CPI gets out of hand. But all that would do, with all the debt that the government is creating right now, I think they've borrowed $1 trillion, the Treasury. That's in the last 3 months. That's the most in history. If they start raising interest rates, the whole yield curve, Treasury yield curve, will go up. That means the government is going to get in trouble. It's going to bring down the housing market. It's going to be a mess, and they'll have to reverse it right away. I don't think there's a way out. In 1980, gold topped and came down from 850 or a little higher when Volcker let rates go to 20%. But back then, the national debt was 35%. There wasn't as much debt in the system. The system wasn't as leveraged. The financial system didn't have as many, didn't have derivatives at all, very little derivatives, except in commodities. But nowadays, it's a completely different thing. The national debt is 130% of GDP, going on towards 200 in a few years. You've got over a quadrillion in notional derivatives amount. So the Fed, they can just threaten to raise interest rates if CPI goes up, and they might raise it by 0.25% from 0 to 0.25%, and they might do it again, and that could hurt commodities, gold and silver. But in the long term, I would be loading up if that were to happen, because they're going to have to reverse everything unless they want a total implosion, collapse of the economy. And then I would also want gold and silver, because a lot of businesses and banks would go under. Yeah, so that's the way I look at it. Let's see. How would raising rates help? Well, normally a central bank raises rates in order to keep inflation at bay. But the thing is, the central banks really since 2008, they've been inflating. They haven't, the Fed tried to raise rates around 2015, 16, 17, 18. try to normalize, but they could only get back up to 2%, and then everything was like imploding, so they had to reverse everything. The ECB, they've basically have had rates at 0 or negative for a decade. Japan as well, Switzerland. But yeah, before that, in the 90s and early 2000s, if things were getting frothy in terms of money and credit, the central banks would raise rates, from 4 to 6%, and then that would slow things down or start a recession, and then they would cut again. But nowadays, that doesn't happen anymore. All they do is print, and keep rates at 0. It's just crazy. New Church of Philadelphia with Dubs. Thank you for your super chat. Have you heard of Russell J. Gould? If so, what are your thoughts? No, I haven't. I've heard of Jay Gould back in the 19th century. I think he was like a businessman, a speculator, but I haven't heard of Russell J. Gould. Let me check here. Russell J. Gould. No, I haven't heard of him. Never heard, sorry. Who is he anyway? So I don't have any thoughts on Russell J. Gould. I don't know who he is. Penny pitching prepper. Hey, Mario, what's up? Dog. Well, Billy is here, but he's on the floor. Let's see. Yeah, we got time. Taz, doesn't the Fed have the ability to use Forex as a tightening tool, if not influence the Forex market? Yeah, they can influence the Forex market, but they'll have to do that in concert with other central banks, just like they did in 1985, the Plaza Accord. And they have to all be, how can I say, on board. And back then, the dollar was way overvalued, and they decided to sell the dollar to weaken the dollar because the trade deficit was really high. But nowadays, all central banks want to devalue against each other. The only currency that is not a national currency that they can devalue against is gold. And that's what I think is going to keep happening. So that's another reason why I hold, and I think it's wise to hold not just gold, but also physical silver and commodities as well. CAFR reports, I think I've heard of them, Fritz. CAFR, let's see. It rings a bell. CAFR report. Oh, yeah. Is that about the is that about all the assets that are held in state pension funds that they run into the trillions? I think CAFR, yeah. I've heard of that. I guess that's one of the reasons why they want to keep the stock market elevated, because that's the only thing that's keeping the US economy and the world economy going now is inflated financial assets. If that deflates, the whole house of cards implodes. Metallic Miner says, I'm English. I'm purposely missing watching the cake and circus show. 3-1 to England. To be honest, I didn't follow this football championship. I just watched the previous match, and I will watch the match today. Yeah, it is bread and circus. I don't think there's anything wrong with sports, but it's what people make out of it. It's just a game. I think it should be friendly game, sport. but some people make it a matter of life and death. Hopefully it will just be a good match and the best team will win. Platinum, Steve V. Yeah, no, platinum is part of the commodities, sector. I don't focus much on platinum because it's not a monetary precious metals. I focus more on gold and silver, but platinum, I think, has got a bright future as well, like all other precious metals and commodities. Lily Robin thinks sports are scripted. Shekel Clipper thinks all sports are rigged. I'm not too sure about that, but anyway. Dr. Delbert says we will confiscate China's holdings here to pay for them releasing. I'm not sure if it was just China who released that. So the thing is, don't forget, China is your biggest lender. It's Uncle Sam's biggest lender. You could try to do that, and they could pull the plug on lending money to Uncle Sam as well. So it's a double-edged sword, I would say. So-called Silver. Hi, So-called Silver. Nice to see you here. Yeah, we're doing the live stream a little earlier today because there's something going on here later on, and everyone's going to be watching television in the UK and Europe. So I decided to do it a little earlier. Dan W says gold has no capped supply. You dig, and the more you find. Bitcoin is a maximum supply of 21 million. The thing is about gold is that the supply dries up if the price is too low because it becomes uneconomic to explore. First, you have to explore to see if there's any gold, and all of that costs a lot. And if you think there is gold, then you have to start. First you prospect, sorry. And if you think there is gold there, then you have to start exploring. And if the price of gold is too low, you won't do that. So, and then if the price of gold goes up a lot and too many people explore and then, prospect, explore and build mines and get the gold out, it goes in cycles, but it takes years to develop new mining. I would say that the 21 million Bitcoin is actually a problem because for something to be work well as money and currency, it has to have value, of course, but it has to be sufficiently abundant to work as well. And that's why the bimetallic system worked really great. Gold and silver, they complemented each other. I'm not sure if 21 million Bitcoins is enough. Fritz Bender, do you like your royals? Do you like supporting their extravagance? Well, I'm originally from Brazil, so I think we had royals there until 1889. I couldn't care less too much for royals. They're just normal people, in my opinion. Yes, they have a lot of privileges. Do I support their extravagance? What can I do about it? But no, I think it's an anachronistic system. Um, we're supposed to be in a free world, and we still have families that dominate politically. So I don't, yeah, but it's not only here, Fritz. You've got royals also in Holland, Belgium, where else? In Spain. Many countries still have royals, and I think you guys had royal. I know. I think you were from Germany. I'm not sure, or in the States, but yeah, I don't think it would make any difference if we didn't have them either. We'd still have, in the States, you don't have royals, but look at the situation the States is in now as well. So it's, yeah. Silver Highwayman says, I love the Queen, especially on the silver and gold coins. Well, yeah, the UK coins are really nice, and they do have her face on it, her profile, because she's the monarch. It's the coin of the realm. I don't think people should stop accumulating gold and silver just because it has someone's face on it. Blast from the past, storing precious metals in security vaults, especially if they're a good distance away. I don't think it's a good idea. In the world where things are relatively stable, yes, but do you really believe the world is stable in the ever since 2020? So no, I don't think it's a good idea anymore for that. JM, gold is your castle, silver is your cottage, copper is your grocery, money, and Bitcoin is your slot machine. I never heard that one. Interesting. I'll take a few more questions, and then we're going to end the live stream soon. We started at 6:50. It's now 7:50, so we've got an hour. Lord Humongous says the world is a ghetto. How can cryptos survive when they have to buy entire power plants to mine them? There are some cryptos that are proof of stake, like you don't have to mine them, but they're not as decentralized. So let's see. Fritz Bender says royals are so passe. I agree. And the reason why we still have royals here, I think it's because of actually the stability of the UK. It's been, I think the last time we had a revolution in Britain was in the 1650s, 1640s, the Glorious Revolution. So it's been relatively stable, and it's part of the system. Yeah, it would be a huge, if you think Brexit and getting out of the EU was complicated, getting out of a monarchical system, I think would take years, because a lot of the institutions in this country are kind of derived from the monarchy. So it would be a huge, it would cost probably hundreds of billions to make the UK a republic. So there you go. Am I saying I'm a royalist? No, I'm just stating the facts. Silver highwaymen, the Commonwealth is a stable empire. While the Austro-Hungarian Empire was very stable as well. That lasted for a long time, and it kept really diverse nationalities all together in Eastern and Central Europe. It was only because of World War I that really collapsed. And what you got after that was basically a lot of another World War, and then you got communism for about 50 years. So yeah, the Austro-Hungarian Empire was actually quite a stable political construct, I would say. Blast from the past. Did Billy have a good birthday? Yeah, he did. Thank you for your super chat, Blast from the past. He's quite healthy. He's been going out every day for his walks. He's walking a lot slower now, though. Okay. We're going to go now. I'm going to wish you all a great rest of the weekend, and I will talk to you guys tomorrow. Thanks again for being here, and I appreciate it. Bye.